Welcome to Every Dollar Counts with Josh and Jay, a shot of truth serum for your investment and insurance questions. I'm Josh Knoll, the owner of Gulf Coast Financial Advisors, and I'm joined by my co-host, Mr. Jay Stubbs, Director of the Gulf Coast for Concourse Financial Group. We are brought to you from Deep Fried Studios in downtown Mobile, Alabama on the Gulf Coast Financial Advisors Podcast Network. Jay, how you doing, man?
Josh, I'm doing well. Glad to be inside some air-conditioned doors.
Yes, it's definitely a little hot down here now. Well, Jay, for this episode, we're going to talk about the stock market, and it's being at an all-time high, but, with some factors of the economy healing, tech leading the way for growth, and the bull market remaining intact. But there are some warning signs, particularly for those folks in the retirement red zone with less than 5 years before retiring. What things should they be considering with their investments? How should they be getting prepared for landing? But before we dive into all this, let's have our friend, some Sloth Racer, kick us off. Quick housekeeping for compliance. Jay Stubbs and First Protective are not affiliated with Prime Capital Investment Advisors, Qualified Plan Advisors, or Gulf Coast Financial Advisors, and Josh Knoll is not affiliated with Concourse Financial Group. Now, Jay, our regular listeners are going to notice a different phrase there, Concourse Financial Group. So before we get into our topic today, let's talk about the change from First Protective to Concourse. What's going on there?
Yeah, we won't talk about it too much, but those listening would like to know why no more First Protective, right, which is the company I have served as the director of the Gulf Coast for over 20 years, and now changing that to Concourse Financial Group. Basically, we have a parent company, Protective Life Corporation, who's also got a parent company, Daiichi Life, out of Japan, which is where the Olympics are going on right now. But we have a parent company that chose to consolidate three different divisions. They took two distribution companies. One was First Protective, and one was Protective Life Distributors. And then I took our broker-dealer and our investment advisor, which is Pro Equities, and they consolidated those under one. At the end of the day, all it means is we've got some new colors, we've got a new name, and we had to change our disclosures, and you had to change the compliance talk on this. I still do what I do, which is work with advisors like you in and around the Gulf Coast, supporting them in their risk management efforts, life insurance, disability income protection, long-term care, help them with their business, and it's just under the Concourse Financial Group umbrella as opposed to the First Protective umbrella.
Well, it sounds like kind of clears up the picture a little bit, gives you a clean path for advisors working with y'all.
It does. And, the advisor marketplace, those that are similar to you that might be listening to this, just to get an idea of, that is our target market. We like to help those firms, those individuals, and those partnerships, whether they're brand new into the industry or forming their own independent operation, or, they have maybe a bank or an investment firm. We help them with their risk management stuff. So the Concourse Financial Group agency is still what I continue to do, and it's my passion, as you well know.
Absolutely. Very good. Well, Jay, what I want to talk about today, as I laid out in the opening, is we have a stock market at an all-time high, and it seems like you and I have been having this conversation ever since last April, as everything came screaming back from COVID, and just kind of some of the things that are leading the fundamentals that are pointing maybe in a good way. And then also, but there are some danger signs, particularly, again, for those folks that are in a retirement red zone less than 5 years before retirement. There's obviously probably some fear, and I know there is because some of my clients have expressed it, of retiring into a 2008 type of situation, where there's a large drop in the portfolio right off the bat. So we're going to kind of gear the conversation toward those folks. Not that you young folks don't matter, but for right now, you all that are trying to accumulate and get started, there's no good time to either do this and other now. This is really going to be about geared towards those that have accumulated, some assets, particularly in like a qualified plan, like a 401k, and just some things to think about on the good and the bad and the ugly, if you will. So, Jay, I'm going to start with you. What's some signs that are kind of pointing that, this is not an artificial high, if you will?
Well, I did a little research before this, and I came up with three items. The first is technology. Someone once said that technology has never moved this fast, and at the same time will never move this slow again. There's so much technology news going on, and that's driving a lot of the growth. A lot of people see growth in the marketplace. The whole shift to 5G wireless, the cloud, and all the cloud technologies, blockchain. And the topic there. I don't even want to get into that rabbit hole. You got companies like Tesla coming out with Starlink, which is the low orbit communication satellite, trying to bring Wi-Fi into every part of the world. And then you've got vertical indoor farming. That was a click link over the weekend that I checked out. Just all kinds of technological advances that are spurring growth. And at the end of 2020 and into 2021, a lot of the market push was in the value plays.
Right.
And some research before this quick recordings, some quick research shows that the growth is now taking over. But with that, the second thing that I notice is our United States government, the great country of US of A, the government has never been so large and intrusive ever. We are spending a lot of money, especially from pandemic. So, just the sheer fact that there are numbers of plans on the table talking about $1 trillion in one particular plan and $3.5 trillion over the next several years, on top of the already $5 trillion that we've spent during this pandemic. And, that's a lot of money.
That's a lot of money.
And that's a lot of government influence and a lot of government spending and not to get into the whole tax burden of what it looks like down the road, but how does the growth of the marketplace and then the threat of the big government intrusive spending, how does that all come into play? Well, we see a lot of people with money in their pocketbooks getting money for their kids, getting money for not being able to quote unquote find employment. Yet you hear employers out there saying,
desperate.
I'm desperate for employees.
Right.
So we're kind of in a weird situation right now. If you go online and start reading, there are a lot of people that are bullish. So we've got technology, you got big government getting bigger, and then you've got this topic they call it the topic du jour of inflation.
Right.
And what is our inflation looking like? Are things going to be more expensive than they used to be? The answer to that question is yes. We're seeing it right now. Gas is more expensive than it used to be. Milk is more expensive than it used to be. I ate dinner over in your part of the world last week over at Char 32 on County Road 32 in Fairhope. My cousin Deneen says beef is more expensive. So everything is more expensive, and we're seeing inflation, but we don't see the Federal Reserve coming out and giving us any inflation measure tactics that they're willing to use. So bullish market, technology is growing things. We have a big government. We have inflation on the rise. One more thing is right now, here we are past the midpoint of 2021. We're starting to hear this word variant of COVID-19. The one Delta, I think Epsilon would be the one after that. I'm not sure, but we are definitely hearing the Delta variant out there. So what does COVID look like, and how is that going to impact businesses? Man, I know I'm throwing a lot at you, Josh, in these last 3 or 4 minutes, but that's just what you can glean over the internet, reading in a few clicks of what's the market look like.
Well, all right. So we've kind of established the positive fundamental of that side, the technology growth. I mean, we may be at a pivot point all the way around with monetary policy in the course of human history. Who knows? But let's unpack a couple of those things. First, inflation. So, Jay, you mentioned kind of the everyday cost of materials, gas, groceries, things like that. And I'm a consumer, so I can tell you that's a fact as well. And inflation can be a pretty detrimental thing to a pre-retiree or retiree. Their buying power, they get into it. And we always, when we do our financial plans, we always kind of plan out for a certain level of inflation. But, it doesn't take much to blow through that, especially if you go year after year on high inflation. That's really going to impact that plan. So we have to be aware of that. The one kind of strange flip side to that is a lot of people don't realize that low interest rates are great for borrowers, but they're kind of tough on savers. So, retirees, any retiree right now can tell you, like, my gosh, my fixed instruments are they're garbage. And I think that's part of the reason you've seen such a flood into the equity market, because you just can't hardly get a decent rate on a fixed instrument. So there is one kind of strange flip to that. If rates go up, then there's a little bit more, there's better or other options on the table for retirees and pre-retirees to try and generate a fixed income.
Well, and we haven't been in a period of high inflation for the last at least 10 years. So people really are kind of, if it's off the radar, people aren't really worried about it. But the sheer fact that it's in the news and the sheer fact that you and I are talking about it, people who are nearing retirement red zone, 5-6 years away from thinking that they are wanting to slow down or completely stop working, need to evaluate their overall portfolio, their qualified, their non-qualified plan positions, and see what that dollar might look like. It's something that we can forecast. You as your financial advisor and with different planning software, you can plug in different inflation rates and see what the dollar might be worth 5, 7, 10, 15, 20 years from now. And people need to look at that in their overall financial planning. They also need to do a risk tolerance of how they want their money to continue to work for them today. There's always been a shift towards lesser aggressive portfolios and more conservative positions as you get closer and closer to retirement. I like to use the old, how old you are. You might be 60 years old, but use the rule of 100. If you're 60 years old, maybe 60% of your portfolio is in a growth state, where 40% of it might be in a conservative. And as you get older, you start to whittle that away. So as you get 60% should be, I said that all wrong, Josh. 60% would be in conservative, right. 40% in a growth position. So let me restate that. 100 is the number. If you're 60, you would be in 60 conservative, 40 growth. As you get older, 65 and 70, you're getting more and more conservative with your thoughts.
Honestly, it's been hard to do because, again, other than the blip of March 2020, most people that have had funds in a qualified plan or an investment account have seen some pretty positive returns, pretty positive feedback, right? So I know, I've got a handful of pre-retirees that we're going through a financial plan right now, and they understand that it hasn't been normal, the rates of growth that they're seeing, but they're really reluctant to let go of it. And they get caught in this kind of strange straddle line of, man, I don't want to miss out. However, I don't want to be where I tip right over the edge if something goes sideways there. So it's a delicate situation, and it's something that has to be worked through each person individually.
Well, nobody predicts the market very well. And market timing is risky. It's kind of like timing. When do you put down the $50 chip or the $500 chip on the next blackjack table? I mean, it's the same premise. So you might be out of the stock market right at the time when it's generating the biggest returns, and you feel like, I wasn't there. I didn't get the growth that we were looking for. But that's the nature of the market and the nature of the beast. But if you take a longer term perspective, you're going to find yourself in a position of some growth stuff, some value stuff, some bond positions, some treasury linked positions, and you just manage those with an advisor like you and a portfolio strategy that you can bring to the table where people understand, okay, as I get older, as I get nearer and nearer to retirement, I become less aggressive, more conservative.
Right. Well, and I think too, Jay, quality matters. I mean, and no offense to AMC and some of the meme stocks. I mean, that's fine. It's fun. It's it makes a cool story, but for the love of God, don't base your retirement on that.
Heck no.
You're walking into retirement on some of these things in quicksand if you're doing that. Quality really does matter in the long run. May not seem to at the time because you're seeing these things shoot all over the place, and your friends are telling you how much they made on this particular stock or something like that, and that's fine. I mean, we have no problem with that. But really what you want at the end of the day is quality. Jay, I got one more thing. This would be kind of the good and the bad and the ugly. This would definitely be the ugly. Now, you and I have no idea what's going to go on with COVID. We don't know what's going to go on with this Delta thing. But I can tell you that just with my network and conversations I'm having, and then honestly, my wife Jen and her CPR certification business, she's pretty involved in the healthcare industry. There's a lot of chatter, man. I mean, there is definitely some fear on that side. What have you heard?
Only that driving down to an 8 o'clock appointment this morning, so we're in end of July, there was a line at the urgent care, just before 8 o'clock. There was a line of maybe 10, 15 folks. I don't know what they were in line for. I didn't poll them. Every one of them had a mask on. I think that's what the general premise is. If you're going to go into a medical situation, you're probably going to wear a mask because that's just a smart thing to do nowadays. We've realized that. But you're hearing it in the news. It'll be interesting to see. Maybe we don't like to time date or time stamp these episodes too much, but I'll be real interested to see what we do with schools, what some businesses may or may not do on getting back into the workplace and engaging in that. And it really all depends on where you live in the country and what states you live in. Some states are obviously going to be more conservative than others, and some are going to be a little bit more restrictive and a little bit more lockdown premise. How that impacts the economy, how that affects businesses, small, medium, and large-sized businesses, who knows? But COVID is out there. I don't think it's ever going away. You hear that all the time. Now it's something we're always going to have to deal with, and they're just going to have different variants of COVID-19. Unfortunately. So we just got to keep our ears open and our eyes open and make sure that we can see what's coming. And especially for those pre-retirees, people who are getting a little nervous, the question is, are you at a point in life where you actually need to use your money And if that is the answer to that is yes, then you need to come in and sit down with an advisor like yourself, Josh, and Gulf Coast Financial Advisors and have a serious conversation. So if you're listening to this and you're getting close to that and all of this news and stuff has got you on the worry, have a conversation with an educated person.
Yeah, we don't have a crystal ball, but we can definitely have a plan in place to absorb some of this, both directions, honestly. So, Jay, you got anything else for our wrap up?
No, man, we enjoy having these conversations. Don't underestimate the power of sitting down with professionals. You call in the professional to have the plumbing fixed. You call in the professional to have the electronic issue fixed at your home. When it comes to looking at your money and maybe a portfolio question or a retirement question or where should I put some of my hard-earned dollars and how do I protect those hard-earned dollars, have a good conversation with a professional.
Totally agree. Listeners, on that note, if you'd like to have a follow-up conversation, you can call us at 251-327-2124, or you can set an appointment via my website, gulfcoastfa.com. That's gulfcoastfa as in financialadvisor.com. And to all you independent and semi-independent advisors and agents out there that are listening to us and you're hearing the value that Jay Stubbs could bring to your practice, you can find him at jaystubbs.com. That's JAYSTUBBS.com. So many thanks to our producer, Johnny Gwynn, Deep Fry Studios, to my co-host, Jay Stubbs, and of course, a huge shout out to all y'all that have joined Jay and I in this journey, and to those of you that are joining us now. Do me a favor, please subscribe on the Apple Podcast app or wherever you find your favorite podcasts. And while you're there, you would be doing us a huge favor if you would rate and review the show. It helps other listeners like you find us. Lastly, you like the show music? Go check out slothracerband.com. That's slothracerband.com, and they're going to take us home now. This has been Every Dollar Counts with Josh and Jay. Advisory services offered through Prime Capital Investment Advisors, LLC, PCIA, a federally registered investment advisor. PCIA, doing business as Prime Capital Wealth Management, PCWM, and Qualified Plan Advisors, QPA. Gulf Coast Financial Advisors is independent of Prime Capital Advisors. Information presented for educational purposes only, is not an offer or solicitation for the sale or purchase of any securities. All investments involve risk, and unless otherwise stated, be sure to consult a tax professional before implementing any tax or investment strategies.